Man, don't you hate when you have to shave because of job requirements? Man, don't joke my facial hair. Please don't. I'm very sensitive about my facial hair being gone. What's up, guys? In this video, we're going to be talking about my game-winning portfolio 7, and we're going to be talking about what's going on in the market and what I've been doing. Let's get into it. Welcome to Piece of the Pie with Ty. I'm Ty, and I appreciate you guys coming to check me out. If you like any of the content in this video, please hit that like button. It really helps me out. And if you haven't already, make sure you subscribe to the channel so you can come back and see me. My channel is all about making sure people are aware of the different avenues to get a piece of the pie. I appreciate all the positive vibes that you guys have been sending my way. And if you're new to the channel, thanks for tuning in. I hope that you stay with me. In this video, we're going to be going over my game-winning stock portfolio. And the reason that I show my stock portfolio is to show people that it's not hard to invest. I'm not Chris Sane. I'm not going to tell you what to get in. I'm not my boy, the options boss, either. I'm not going to tell you which options to go out there and buy. I just want to show people that it's easy to invest and get a decent return on your investment. If a blue collar guy like myself, who doesn't even make 6 figures, can do it and get decent returns, so can you. That's the whole purpose of my game winning portfolio. But let's go to the computer and check it out. Alright guys, and I'm on Dividend Watch. It's the portfolio tracker that I use. You can track and analyze your dividend stocks. It gives you investing ideas, dividend aristocrats, blue chip stocks, high yield dividend stocks, real estate investment trusts, high growth, high yield, premium. I might have to do a video on some of them. Dow 30, NASDAQ 100, dividend zombies. It gives you a whole bunch of investment ideas. And of course, some of them are premium, like the blue chip stocks, the high yield dividend stocks, and high growth, high yield. So it's definitely worth checking out if you are looking for a few stocks or don't know where to go. Dividend Watch has you covered. And Dividend Watch also tracks different markets, not just the NASDAQ and the ones that's in the US. Some of the good things about their portfolio tracker, you can calculate your dividend income, estimate your monthly dividend income, and diversify and keep track of your dividend portfolio. If you are interested in a portfolio tracker, you can check out Dividend Watch's free membership, or you can go ahead with their premium membership, which is $64 a year. But if you use the promo code TY15, you get an extra 15% off of that first yearly membership. And it's definitely worth it. As you guys can see, I'm currently active and I'm going to keep going. Dividend Watch is relatively new, and every other week they're adding a whole bunch of different features. And with that being said, I foresee Dividend Watch's price going up in the future. Of course, I don't control Dividend Watch's price, but I just can see it because they are adding a lot to Dividend Watch in this portfolio tracker. They're putting a lot of effort and time into it. So you might want to check it out while it's still at this low price of $64 a year. So if you do want to check out a portfolio tracker, check out Dividend Watch while they're still low. Now let's go to my portfolio. Okay guys, this is my portfolio on Dividend Watch. As I said before, you have to make sure that you are uploading your new transactions into Dividend Watch's portfolio tracker so you can be accurate. As you guys see, I'm doing pretty decent. I'm slightly up in growth from last month. I was at 18.36. Now I'm at 19.02. And of course, the value of my portfolio has increased because I add money to my portfolio weekly. And as you guys see, this dividend income has increased too. Last month, I was saying I wanted to make sure I nudge over that 300 mark. I'm at 316 for my annual dividend income. This portfolio is a mix of growth and dividends. I'm trying to put more into my dividend stocks currently because I feel like I'm a little overweight with the growth stocks, but I'm trying to make up for that right now. Dividends so far this year, $193. And of course, I reinvest my dividends back into the companies because I want to make sure I am compounding my dividend income so it'll pay off in the long run. And my dividend yield on my whole portfolio is 2.24. I want to get that to about 3. I'm going to slowly start getting that to 3. But yeah, as you guys see, I've been winning. Slow and steady for me wins the race, and I'm fine with that. I feel safe with my portfolio, and it's nothing that's too drastic that can happen. For example, we all know that right now the market is kind of crashing and things like that. But as you guys see, if you go back and look at my last month's portfolio, my portfolio didn't move. The market's been going down, but my growth has gone up. My dividend income has gone up. So that's why I want a little bit more of those dividend companies, because they are safer avenues than a lot of those growth companies. But you got to kind of have that perfect balance. And I feel like I have the perfect balance in my game winning portfolio. And I'm steadily dollar cost averaging into the positions in this portfolio. I rarely go and buy a whole bunch of different new stocks. When I do add something that's new to the portfolio, you guys will definitely know about it because I will show y'all how I did my DD on it. So as we go down my list of stocks, I'm going to tell you guys what I added to the portfolio. Apple's still doing decent for me. I'm positive in my position in Apple. ACRE, that's one of my REITs. I'm up in my positions in that company, and as you guys see, I'm bullish on it. I have 26 shares of that, and I like it because of this dividend yield. So that annual dividend is crazy, and that's the power of a REIT. If you guys have been watching my channel, I'm really bullish on REITs, and you can see why. Above it is Apple, and you see the total value of Apple I have is $750, and then the total value of this REIT is $410. But that dividend income is killing Apple, and that's what REITs will do. So if you find a perfect REIT like Eprt, I know y'all saw the video on Eprt. If you didn't, pay attention, because as you saw in Eprt, let me go down to it real quick. Eprt had a killer growth, right? And I get a dividend payout of almost $60 annually from Eprt. When a company like Apple, you can have a lot of money in it, it's going to give you a subpar dividend. And if it doesn't grow as much as a REIT, you like, man, I could have had my money in a company that had better growth and paid me more money for holding it. So Apple is a great company. Don't get it twisted. Apple is a great company, but it's not the best company out there when you're looking for growth and dividends. A lot of the people that are super bullish on Apple, they are the people that got in on Apple when it was like $10, $20. They had a nice run because Apple took over. Apple is still taking over. So I'm not sure if Apple is going to have another 300% run in the next 3 years. Maybe, maybe not. I don't see it. That means their price had to triple. Maybe, maybe not. But some of these smaller companies, it's definitely possible because they have not even reached that large cap area. Apple is a large cap company. It can have exponential growth and double and triple, but it's those small cap and mid cap companies that are more likely to double and triple because they are not yet large cap companies. But that's why I love my REIT. And ACRE, Eprt, it's a small cap company, so it has that potential to grow. ADT, that was a free stock. I didn't sell it. I just kept it. AMD had nice growth. Of course, it doesn't pay a dividend. AYX, that's one of those big data companies, and They are saying nice things about AYX. The Motley Fool even had an article about AYX saying it was one of the next stocks that could blow. And I've been holding AYX for a while. And I've seen it come down tremendously. But I'm still holding it. I still think it can come back. Brookfield Asset Management, bam. Decent growth. And they pay me a nice little dividend. Not the greatest dividend, as you guys can see. It's not even 1%. But it's something. It has nice growth. If you look at BAM, it has the potential to be a decent financial company. I chose Brookfield over the traditional bank because it has that potential to grow. And then once it grows, it will probably level out and start paying more dividends. That's just what I think. I'm not a financial advisor, so don't think that I'm telling you to go get something. I'm just showing you guys what I'm doing and my thought process when I got into some of these companies. Cyber, as a cyber security ETF, and it has a lot of cloud-based data companies in it. It's a pretty solid ETF. If you look up some of the holdings, you'll definitely like what you see. And I got pretty decent growth on that. Cloudera, I got good gains in it, but I'm just waiting for them to cash me out because it's going private. CRISPR, I'm down in my position, but I definitely think CRISPR has great potential to shoot up there. It's one of those stocks that Kathy Wood was on. I definitely like CRISPR because I think it's the future of genetics. CRSR, Corsair Gaming, you already know that I'm bullish on Corsair Gaming. Check out that video about Corsair Gaming and Nerd. Delta Airlines, I'm holding and I'm up pretty decent. I wish I would have kept more of Delta, but that's hindsight. Darren Restaurant, I'm killing it in that, and I like the dividend payout that I get from Darren Restaurant. Eprt, you already know how I feel about Eprt. Eprt is a REIT that hit the market in 2018, so it's a fresh company to the market, and it's been on an upward trajectory ever since its IPO. Some people call it the next O. So if you look at EPRT's price, $31, and O is up there somewhere to like $60 to $80. So in my head, this company that's $31 has the potential to go to a $60 price. In my head, EPRT and ACRE both are REITs that didn't stop paying dividends during the pandemic. Make sure you guys are paying attention to that. If a REIT didn't pay dividends during the pandemics, I don't care what nobody said. They're a weak REIT. They're a weak REIT. These companies paid the dividends and increased their dividends during the pandemic. So beware of companies like IVR and MFA. They stopped paying dividends. They couldn't handle it. Like I said, they could come back and have killer growth, but I don't want to rely on a company that couldn't handle the pandemic and stop paying the dividend when there's great companies that could handle it and still pay me my dividend during the pandemic. Pay attention to that. FHLC, that's the Fidelity Healthcare ETF. Great sector to be in, the healthcare sector, especially for an ETF. HEI, that's an aerospace company. It was one of my first aerospace companies I went into, and I bought them because they were way low, and it paid off. I bought them because I couldn't afford Northrop Grumman or Boeing at the time, but I'm glad I avoided Boeing. But they are one of my aerospace companies that I definitely have faith in because I'm still holding. Coke, you guys know about Coca-Cola. Coca-Cola pays a decent dividend, and it has had great growth. So these dividend companies, they have been staying stable. That's why my portfolio doesn't drop as much, because I have these dividend companies that pay me a dividend, and they're not really moving. When the market goes like this, they're moving a couple cents, not even $1 most of the time. So I'm like, oh, the market's down, I'm going to buy some more. That's what I'm going to do. Okay, the market down, For who? I mean, for the people that's heavily involved into those growth companies and don't have a good balance, the market goes down and they see these big drops. I see a little drop and I'm like, oh, it's not like I was about to sell out tomorrow. I'm planning on holding this portfolio for at least like 8 years. A little drop now just means, okay, cool, I buy. I'm pretty sure it'll go back up before 8 years. You see what I'm saying? So don't panic when you see the market starting to crash. Because I know that everybody has been seeing the market go down a little. But don't panic if you're a long-term investor like myself, which is what I'm really all about. If you're looking at this portfolio, you like, oh, he don't have enough growth stocks, or why are you doing that? Because I'm a long-term investor. Almost all of my portfolios I plan on holding for 5 to 10 years. Maybe more, but depending on what it looks like, you know? So that is how I think when I go and make a portfolio. I think about what are the companies that I can hold for a while, and I don't have to get tense or panic when I see a company start to dive. Lowe's, you guys know how I feel about Lowe's. Lowe's is a great company and it's always needed. That's why I like Lowe's, because you always got to go to the home improvement store, you know? Just like a REIT, you always need the housing market and you always need the building market. No matter what, people are going to build and repair, and people need places to stay. And all of those companies pay a dividend. So this is why, so some of these companies that don't pay a dividend is why my dividend ratio is so low. And as you guys see, none of these ratios are super high. That's where companies like Eprt, ACRE, and a couple of my other stocks that we're going to get to come in and try to boost that dividend yield up. Southwest and Delta, they're another two that, as you guys see, they are supposed to pay a dividend, but they haven't been paying a dividend. I'll be glad when they do re-up their dividend, but as of right now, they haven't been paying their dividend. That's why Warren Buffett got rid of them. Oh, and I forgot to say, I did buy one more share of CRSR. I told you guys I was going to buy that in that video that I did about them. And ACRE, they're the only two companies so far that I have bought into. Microsoft is doing well. It was hitting all-time highs, but Microsoft is a solid company. We don't have to worry about Microsoft. Nerd, as you guys know, I did buy another Nerd. I bought one Nerd and one CRSR last week, and that's how I buy my companies. I already got it mapped out, and I just go buy the companies that I have mapped out already. Northrop Grumman, that's one of my aerospace companies, and I love Northrop Grumman. I love them. Northrop Grumman is my biggest holding in my portfolio. As you guys see, this number $2,209. That's my biggest holding in the portfolio. It's Northrop Grumman. That's my top holding. Then Eprt. That's number 2. And then SPHD. That's number 3. Nova is a solar power company. And this week, I'm buying 2 more Nova. No matter what the market does, I'm going to buy 2 more Nova. Nova doesn't pay a dividend, but is a power company that's pretty stable, and it's another company that's fresh to the scene. As you guys know, all power companies end up paying a dividend, but Nova has some growing to do, so I'm going to make sure I'm with them while they spread their wings until they get to the point where they are paying a decent dividend. OHI, that's a healthcare REIT. You guys know I love my REITs. I'm down in my position in them, but I'm not worried. It's still a decent REIT, and they pay a pretty decent annual dividend. Prospect Capital, it was one of my free stocks. As you guys can see, it's pretty positive, and it pays a decent dividend. I've been saying it, but I might add to that Prospect Capital position eventually. But it's not on my list right now. But that yield is crazy. SDIV, Global X Super Dividend ETF. I did buy 6 more of them since my last portfolio update. And I like them because they are a global super dividend ETF. I don't have too much exposure globally, so I like the fact that that's a high yield dividend company that I can invest in that has global exposure. SPHD is a monthly paying dividend ETF. So is SDIV. SPHD was my first dividend ETF. As you guys see, I'm heavily invested into SPHD, but I've been kind of drawing back just a little bit on SPHD. What I'm realizing is that the ETFs are great for safety. They're great for safety, but you get a better return if you go out and get some high yield dividend stocks yourself instead of relying solely on the ETF. That's why I'm big on REITs and I'm big on certain dividend companies, because I'm seeing that you get a way better return if you go out and get them yourself. But you got to make sure that you're getting them solid companies, because the ETF is getting those massive dividends and they're paying some out to you. But of course, they're keeping some of it because they got to pay themselves. But if you go and get some high yield dividend companies like REITs, you can bank that money. You just got to make sure you pick the right REITs, like ones that continuously pay a dividend even through hard times. Don't be fooled by the ones that stop their dividend payouts. I stress that because I do see a lot of people hype up some stocks, even the Motley Fool. If you guys do see the clips, even the Motley Fool says certain things that I don't always agree with, but they're professionals. I'm just a blue collar guy. What do I know, right? So, but that's just how I see it through my lenses. Don't be fooled by the companies that stop paying their dividends when there are so many companies that continuously pay dividends. Cisco is a food corporation. I'm up in them and they pay a decent dividend too. And TMFC. That's the Motley Fool Index. So you see the Motley Fool has a lot of picks, but you can go with their ETF. Motley Fool Index is how I'm invested into a lot of the companies that you don't see that you know are popular, like Microsoft, Facebook, Google. I just feel like the Motley Fool Index will do me justice, so I invested into them. And the cool thing about the Motley Fool Index is it was a relatively new ETF, so it definitely has potential to shoot up. That's why it's at $41. If you see the companies that it is invested into, it's just like the SPY. It's just like the SPY-G. And those ETFs are double, triple this price of this $41. So I definitely think the Motley Fool ETF is something for you guys to check out if you can invest. I did notice that certain brokers don't let you buy into the Motley Fool Index. I'm not sure why, but I've dealt with that in one of my portfolios. Matter of fact, that's the reason that I have SPY-G instead of this. I wanted this, but SPY-G I think outperformed it, so it was a good decision. And TPGY, it's a SPAC, and it was supposed to merge with EV Box, which is one of the gas stations over in Europe for the electric vehicles. I say gas, but it's the charging stations. It's one of the charging stations for the electric vehicles, and I still think that company has great potential. I have 17 shares. It's not too crazy of a price for a growth company, so I'm hoping that that will turn around, but I'm negative right now. So all of the companies that I hold in my portfolio, I'm planning on holding for a while. And of course, I see videos about everybody talking about their monthly dividend income. If you got Dividend Watch, you can come up here and just see your monthly dividend income. So definitely check out Dividend Watch and make sure you use the promo code TAF15. So for the month of September, my dividend income is $23.61. For the month of October, it looks like it's going to be greater, but you can see your dividend income on Dividend Watch. That's why it's a helpful and useful tool. And last but not least, my projected performance from Dividend Watch's portfolio calculator. My current yearly dividend income is $359. But if I hold my positions and keep doing what I'm doing for 10 years, my annual dividend income will be $1,733. That's not bad, but I'm definitely gonna make sure I increase that. That's a fact. One thing that's pretty dope about that, my portfolio would be $145,000 if I keep doing what I'm doing, because it projects the growth and the dividend income. But I'm pretty sure the companies that I hold are going to be doing way better than average. I set it to average so I don't get too big headed. But yeah, that's my game winning portfolio. You guys are probably thinking that game winning portfolio isn't even that great. It's about 20% of growth. Yeah, but I got crypto too. And one thing to point out about this crypto is the interest. So I earn interest just for keeping my cryptos on BlockFi. That's crazy. That's just like a dividend. And that's why so many people are against these interest-bearing accounts. And you might as well get it while the getting is good. Because a lot of people want to shut it down from the banks because you can't get that from a savings account. You can't try to get that from a savings account. And I get that interest monthly, and it's killing the bank. And I'm holding the top cryptocurrencies, so I'm not going to sell them no time soon anyway. And I get money for that. Just saying, check out BlockFi. And make sure you hit that like button if you haven't already. If you're still with me, I appreciate it. A lot of people don't stick with me through the whole video. And I just add $10 a week to my cryptos. Every week, I just put $10 in both of them. $10 in both of them. I'm just dollar cost averaging because I'm not going to drop a big wad of money because I'm a blue collar guy. I don't have a big wad of money. But I got $10. And I've been putting $10 a week. $10 a week in the top 2 cryptocurrencies. I don't think you can go wrong with that. But I'm not a financial advisor. If you need financial advice, please seek out one. But that's what I do. I just put $10 a week in Bitcoin and Ethereum. $10 a week, Bitcoin and Ethereum. $10 a week, Bitcoin and Ethereum. And it's paid off. It's paid off. So that's my game winning portfolio. I appreciate you guys sticking with me. And if you like any of the content in this video, please hit that like button. And if you haven't already, subscribe to the channel so you can come back and see me. I got plenty more to talk about. Thanks.